traders, and welcome back to another episode of Market Skycast, your BluSky official podcast. Now, once again, we are filming this live in front of our members, YouTube, Discord, all that good stuff. So we have our traders talking while we are streaming. If we see something they want to talk about, let's just pivot. Let's talk about it. And this is another interesting one because Trump is actually live right now. So if all of a sudden you all see us just stop talking and just go, what the heck? That's because something big just dropped. So we're going to keep an eye on that. And traders in the chat, we need you to keep us updated if anything crazy goes on, because at any second, it could. Now, before we get started, once again, BluSky is having this ridiculous sale. If you are not a BluSky trader yet, 50% off of a 50K launch plan. Use the code WELCOME26 and you can get started for $30. Yes, $30 to get started and access to capital to make that sweet, sweet money. Now, if you aren't in our Discord, make sure you join because we do random flash sales, and this one just ended, but we had a crazy Easter sale. All of a sudden out of nowhere, 33% off almost every evaluation. And you're not going to get that unless you're in our Discord. So make sure to join up. Now that we got the housekeeping stuff out of the way, I feel like a broken record, guys, but we got to talk about what's going on in the Middle East. Every weekend, I feel like I come on and there's just 5 or 6 things we could talk about, as well as technicals, things Trump said, things other leaders have said, things other countries have done. So let's just get right into it. And Becky, I want to start with you. I know last week you were kind of more focused on the technicals because, I think a lot of the headlines are just noise at this point. We had the monthly candle close, a couple other things you were mentioning. Did any of that play out as you expected? If not, what happened and what are you looking for technically kind of going into this week? And are you even following the headlines at all?
Yes. Okay. So thank you for coming to me first, because I feel like it's such a big picture. And for me, I do so much better at trading if I can sort of conceptualize all of it and like put the pieces of the puzzle together and then prioritize them differently. So I prioritize technicals when I am trying to set up my trade plan, but I can't do it outside of the backdrop of what's going on in the bigger world, So this geopolitics, I won't get into the details of that because I'll leave that for the gents here. But I do know that it is very volatile and changing minute to minute. And so that's always on the back of my mind of like, it could be really good news at any point, or it could be really bad news at any point. And so that is definitely having me be more cautious. And I've sized down because I've been dabbling with size. I have a larger size or a little more conservative way that I trade. And for me, I decided I'm just going to lock in the more conservative size while this is still so tense, because that is just what protects me. And for technicals, I'm like, goodness, there's also a lot at play there, because on the daily candle, on the daily chart pattern, we had that strong hold last week out of a monthly, weekly, daily level that was really significant. Like that was a lot of buyers were there. And so now I feel like we're back in a very, very key daily resistance zone that will hold with the Dow trend. So if we continue to reject on the pull-ups, then that will continue the Dow trend. However, we've been holding here at that rejection area for 4 trading days now. So I'm very, very interested to see what will happen with this flag that we have on the daily chart. Technically, I am definitely on guard. I am not interested in holding my longs until I see for sure we are breaking above. But I also don't want to go all in on the shorts because this was a very strong hold at a very key level last week. So I'm sort of just like, so much is up in the air technically and geopolitically. Forex calendar is hot this week. There's important information, especially on Thursday and Friday, but then also Wednesday FOMC minutes post. Not the big guy, so don't worry so much. But, there's just, honestly, there's so much to cover. I'm so glad that we're having this conversation today.
Yeah, and I feel like geopolitically and technically we're sandwiched in between 2 major levels. And traders are just kind of watching, what level we're going to go. Now, Matt, I know you're a resident swing trader. You have any signals popping out yet? Are we still holding strong, finding out what's going to happen?
It hasn't been a swing trading environment in months, to be perfectly honest. And I'm living far more on the intraday charts than I am on daily charts as of right now. But I do agree with Becky in a lot of what she said technically. Number one, we had a lot of technical patterns change last week. Number one, the Monday morning pump, Tuesday doji, end the week at a lower level. That was 4 consecutive weeks. That was the first week last week that broke. Number two, it's not surprising to me that the very second we closed above the daily 90 EMA that the bulls stepped up. Like it's not surprising to me at all. The 90
And you've been talking about the 90 MA for
I've been
a
talking
while.
about the entire time. Like if
Yep.
you just follow one indicator, the 90 MA, it's going to tell you more than any other indicator combined, in
Mhm.
my opinion. And so it's not shocking that the first day in this saga that the market closes above the 90 MA, that the bulls step up and they start behaving a little bit differently. It's almost like that number one momentum indicator means something. And so on Tuesday, you closed above the 90 MA. That's the first pattern that shifted, was the Monday morning pump, Tuesday doji. Second pattern that shifted was the close above the 90 MA. And then the third one was the increase in support at 6,500 on Wednesday last week. And so you had this very important snapback that drilled that 6,500 zone, and now you consolidate in front of that. What this is called is a head and shoulders formation, is what it's called. And you can really see it on the 4-hour chart when you kind of dial in left shoulder, head, right shoulder, and then you have this extremely important resistance level at 6650. And so this level at 6650 is what we affectionately call bear stop out level, because that's where the bear stops are. And the bears are like, please, for the love of all things holy, do not get above 6650. Do not close above 6650, because if you do, we're going to get smoked. That's bear stop out. That's where you can start to see short covering. That's where you can start to see a little bit of momentum. And so Jesse Livermore in the back of my head says nothing is confirmed until we see confirmation, as confirmation is the insurance says you're right on your projection. Well, if you're a bull and you're saying, hey, listen, I like the pattern here, you're not right until you close above 6650. And so that is the insurance. That's the supply zone. But this is the process of corrections reversals. This is something I've seen a billion times. This is something that is very important. And every trader, specifically swing traders, because this is the moment, Justin, where the day traders, where the swing traders are like, day traders, pump this bad boy.
Yeah,
Pump
give us
this
something.
like that's what, as a swing trader, that's what I'm saying is day traders, pump this bad boy, because if the day traders are successful here, you're breaking out of a major level for the swing traders. That 6650 is not just a day trading zone. It is the first zone that is simultaneously a day trading zone, a swing trading zone, and a position trading zone. That's how important that is. And I firmly believe that we will go at the level of the geopolitical conversation, because there is there's 36 more hours until we get into an extremely important deadline, and that's Tuesday night at 8 p.m. Eastern Standard Time, where all hell will be unleashed and we are bombing Iran into the Stone Age if they don't open up the straits. I'm not going to repeat everything the president said, because that's
I was going to say, he said it a little differently.
We might have kids watch this one, so I'm going to take it back a little bit, but there's an important deadline coming out there. And so the market's most likely going to hesitate in front of that deadline. But this is the best look the bulls have had in 6 weeks, I would say.
Now, it's funny. You said day traders, bring the bulls out. Riz and I were on stream this morning, and we were trying, but every time we hit that key level, it just rejected. It looks like it's teasing.
I took 2 longs today.
Wow,
Matt.
who are you?
Perma bear, look at that.
Who
That proves
are
everything
you?
I just said. Bulls are getting excited. Even the perma bears.
I was bullish bias this morning, and I saw my level hold, man.
Now, Riz, let's get to you. We know these kind of key levels. We know that we've been trading the intraday chop together, and it's been brutal. We get wins, but there's no continuation. Like Matt said, everybody's waiting for the breakout or the breakdown. Now, what kind of, on the geopolitical side, what kind of stuck out to you over the weekend? Because I know a lot happened. Or is there something that hasn't happened that you're waiting for to kind of give you a signal, maybe which direction we're going to head?
I mean, there's no clear signal. The only real signal will be either a ceasefire or a peace treaty, or the war continues on. I don't think anything other than that is going to give us a real catalyst on the market. It's more the same from the first term of this presidency, is that, it's a lot of smoke and mirrors and a lot of market manipulation, so it's something I've been saying in the last 2 podcasts, that keep your stops tight and don't marry your bias, because, this is a very manipulated market. Your technicals aren't going to play as strong just because we're in such a strong news-driven market.
Yeah, and so what I'm hearing you say basically is it's all noise until we get a definite yes, no, or maybe, right? Because right now we're stuck in the maybe. If we get a ceasefire, we get a ceasefire. If we get a pure escalation, we get a pure escalation. But I feel like everything
Well,
that's happening right now is
just real quick
yes,
on that ceasefire agreement. There was news that just came out just in the last hour that
well, Trump is talking right now. So what just
Yeah.
popped?
Well, Pakistan, India, and Turkey were basically negotiating to try to bring these parties to the table. And there's a 15-point plan that the U.S. put out there. There's a 10-point counter plan that Iran put out there. Both plans were maximal rejections, which means Iran said to our ceasefire proposal, thank you, but no thank you. You need to leave everything in the Middle East, and then we will accept it, which means Iran said no to the ceasefire agreement.
Right.
Now, there's still 36 hours. I'm sure the president's going to have something to say to that, but Iran did officially say no to the ceasefire agreement.
Well, this is like to my point last week of like Iran is not, they're strong and they are fierce and they are not really trying to back down. So this is like coming to a head of like two forces that do not prefer to be moved and are having large statements within their countries. They're saying very proud that they are going to win within their countries. And so this is not a gentle thing. This is not a low-key situation. And so I definitely think that that's going to impact everything that we have going on, and everyone needs to really make sure that they're being careful, because as we've seen before, these massive like threats of war and massive implications for the world can cause significant swings in the stock market. And us being at an in-between area but in a downtrend overall, like we are vulnerable to some big moves here.
It's technically a decision moment, and it's also a decision moment from a geopolitical perspective. But Becky, that's a wonderful point, because Iran, like, there's no debate that America militarily is hands down the best military in the world. Like from what they did in Venezuela to what they did on rescuing that pilot, like there's just not another military that can do that. There's not another military that has the Air Force that can do what we do. It's not remotely a fair fight from a traditional military perspective. But Iran is not fighting a traditional military war here. Iran is fighting an economic war. They're fighting an asymmetrical war. And so there are two battlefronts here that we have to discuss. It's not just the military battlefront that is important. It's the economic battlefront. We're fighting a military war. They're fighting an economic war. And right now, I would say we're dominating the military side of the equation, absolutely dominating that side. The economic side, we're having an extremely difficult time figuring out how to open up the Straits of Hormuz without some degree of maximal escalation. And that's where this ceasefire deadline comes into play at 8 p.m. Eastern Standard Time on Tuesday night. And so I just felt that was a wonderful point that Becky made, because I hear a lot of analysis of America's won the war, America's won the war. What war are you talking about? Because there are two different war fronts here. You have the military one, and then you have the economic one. And I don't think anybody can argue we've won the economic one, since the Straits of Hormuz is still officially shut down.
I'm glad you brought up the fighter pilot rescue, because Iran did have a little W on their side. They did shoot us down, but we responded with such precision and such force that we got them back without really losing anything else. And I think that just shows how committed our administration is to not backing down and to showing our strength, and just how committed we are to actually just fully winning that side of the conflict.
Yeah.
Made me proud of America.
Absolutely.
Leave our people behind. It's just
absolutely, and that's one thing I really respect about the United States military is we take care of our people when they're in trouble, and that's
there's an old story back in World War II where we had fighter pilots from our Navy shut down in the Pacific Ocean, and we would send in our military to save them, to rescue them. And the Japanese, because this is unique to America, especially at that time, the Japanese, the story goes, is that the Japanese were just in awe that we would put in harm's way more aircraft, more Navy, more personnel. But I just feel like that's kind of what separates us a little bit. I thought it was a very proud American moment to bring that boy home.
Yeah, absolutely. And I felt exactly the same way when I was reading the story. Yeah. And there's a bunch of other things we can talk about, but I think what Riz said is, we either get the ceasefire, we escalate more, we de-escalate, or it's just all noise, and we just got to wait and see what happens. Now, before we get on to our next segment, any last words on what's going on in the conflict?
the market technically is pricing in the news differently today than it was a week ago, 2 weeks ago, 3 weeks ago, 4 weeks ago. Markets have a tendency to analyze the same data differently at low points than it does at high points historically.
You know what? And Riz and I were actually just talking about that because I think you brought up the pattern in the last 3 or 4 podcasts, and it's not really following it today. So that's I'm glad you brought that up as well. You can't use the same playbook every week. You got to be dynamic.
I see it in earnings all the time. Markets at the top end of the trend. Market sells off just because it's at the top end of the trend. Same data comes in at the low point of a trend. Market gobbles it up because it's at the low point of a trend. Price matters. Where how the market takes in data will depend on where the price is, and so you're not having the same high valuation conversations in the market that we were having a month ago.
Yeah, absolutely. Now, that wraps up segment 1, where until this all kind of settles down, we're going to start the podcast talking about this every time because it is by far the most important thing in the world for a trader and probably in the world in general. So let's move on to our next segment, Market Watch. Now, we do have some decent data coming out this week. Obviously, the headlines are still going to drive the market. I think Trump is still talking, so whatever he says is going to have more of an impact. But there are some things to consider. Let's get right into it. Coach Riz, is there anything that you're kind of looking at that doesn't have to do with headlines this week? Maybe earnings, key levels, or some economic data?
You know, we've got FOMC minutes on Wednesday, which, I mean, it's just the minutes. So, you know, we've already kind of know what's going on with that. Thursday, we've got PCE. So that might give us a decent gauge for inflation. You know, we should see some volatility, I would imagine, on Thursday just due to that fact. You know, we've also got CPI on Friday. So probably like Thursday, Friday, I would expect some movement in the market. You know, probably, most likely, for sure, Thursday. You know, I'm going to keep my eye on PCE and see if we can catch another good trade on Thursday.
CPI on Friday, interesting. They just can't keep it normal with us anymore, huh?
No,
we've got to keep us on our toes.
Sentiment also, yeah.
Yeah, and this might be when some of these lagging indicators might start to be telling us the picture. And getting into that, Matt, do you think these lagging indicators have caught up yet, or do you still think we have a couple more months until we start seeing what's actually happening to the economy because of the conflict?
You won't see anything on inflation for a little bit of time. Like, I don't think we're going to see the impact of inflation necessarily on what's going on with crude oil completely in this edition of the inflationary reports. We get PCE on Thursday and we get CPI on Friday. Both of them are expected to have a bump up, and both of them are expected to have a bump up because of the geopolitical situation, and not just with oil, but with like fertilizer and other things as well. And so we are expected, but the totality of that impact on inflation does not happen immediately. There's a downstream impact as everything has to work through the supply chain. And so I would say the totality of inflation we will not feel until we're probably 2 to 3 months down the road. And even if we get alleviation from, let's say the war ends, hypothetically, you'll still see an elevated inflationary bump downstream because of the lagging nature of how long it takes the supply chain to heal, quite frankly. And so there's going to be that impact. If you're going to see early signs, like economically, if you want to see early signs in are we having an economic recession, for example, because that's a big question right now. Does the geopolitical situation impact the consumer to the point where they pull back? And as they pull back, we see a recession. Well, if you're going to see those early signs, it's going to be in the PMI numbers, not in inflationary numbers. It's not going to be in labor. It's not going to be in inflation. Both of those two are very lagging when it comes to what's happening now versus what's going to happen in the future. It's the PMI numbers, both manufacturing and services PMI. Last week, we got the European PMI numbers. We got some of the American PMI numbers, and we really didn't see an economic impact yet. We had a few misses, a few beats, but all of them were in expansion territory, meaning they were above 50. And for a long time, European PMI numbers have been underneath 50. So that's actually a positive thing, not a negative thing. And then we got PMI numbers out of the services ISM earlier today, and that came in at a slight miss at 54 versus the expectation of 54.8. But again, like when you look at kind of where they have been so far this year, I wouldn't exactly say we're seeing that impact economically yet.
Mhm.
And so this is what the market does. This is what our society does. The first time we get concerned about anything, we automatically assume there's going to be a depression. And then how it works the same way with volatility, implied volatility versus historical volatility. Implied volatility is what people think of the future. Historical volatility is actually how it plays out. Only about 10% of the time does implied volatility match up with historical volatility, which means 90% of the time people get concerned about the future. It doesn't play out that way.
Great
That's
point.
what volatility shows us over time. And over time, people economically think that we're having depressions and recessions every single year. You see it all the time. Yet, do we see it in the numbers? That's the important part. And right now, people have concern about recessions because of what hypothetically can happen with the consumer. There's a lot of concern on the consumer right now. Have we seen that bleed out into the economic data? The answer is not yet. And so it's still a concern, but it has not manifested itself in the economic data. And I guarantee you it will not manifest itself in the earnings data starting next week, which is an extremely important part of this equation as we do officially kickstart earnings season next week.
Now, that's a great segue because, go ahead, Becky.
I want to ping on this really quick because something to point out, Matt, is that on this CPI, the month over month for this weekend or for this Friday, they are expecting a 1.0 forecast, which is bananas. We never hit 1.0. That's not even close to the realm of where we've been for years. And so that makes me so irritated because, well, for me, I'm like, this is such massive manipulation. Like, this is just showing that we can trust our government so minimally right now for legitimate information that, like, that doesn't even make sense as a potential for CPI projection because of the world of the situation. Like, most consumers in America can't even afford gas right now because of the way that the prices are. So I'm sorry, but I don't think that there's going to be a massive tripling of improvement in our inflation status of this country, but the fact that that's what is on the forex calendar as the forecast just makes me so concerned. Of the dates are not reliable for when the government is releasing the information, and then this forecast seems bananas to me. So that, to all that to say, that I just think we have to always watch our backs because there's nothing predictable anymore.
Tell us how you really feel, Becky.
Any of this economic data, that 1% is completely made up. It is.
Yeah, where'd that come from?
And someone's like, hey, what do you expect inflation to be? And they just made up a number. They have no clue what it's going to be. But what happens a lot of times when you have these high bar expectations, though, most of the time we don't match that high bar expectation, which means there's an alleviation event. So it's a high bar expectation on inflation, both on the year-over-year numbers and the month-over-month. And so we'll see if it plays out that way. But yeah, there's some high bar expectations here.
Yeah. And now you mentioned, Matt, you mentioned earnings season really, you mentioned earnings season kicks off next week. Is there anything at all you're looking at this week or just kind of par for the course?
You know, I don't have anything that on this week's radar that either one I'm involved in or two that I see as a major catalyst. It's Delta, Constellations, and Levi brands, basically. I mean, don't get me wrong. If you're an investor in Levi's, you are certainly concerned about that. But I will tell you about this. There was an analyst on Levi's earnings report one time back in the pandemic that they gave out. Levi's was going to be reporting earnings just like 2 days from now. And this analyst came out and said, we're going to upgrade Levi's because we believe people will wear more jeans in the pandemic. I still today feel it's the dumbest analysis I've ever heard in my life.
Was he right?
We're all sitting at home eating Cheetos and we're going to wear more Levi's. Like
Gammy pants.
Seriously?
Yeah, I don't think I wore any jeans during the pandemic, honestly.
So we do have Levi's this week, but the real story in earnings is the kickstart to earnings next week. Mm-hmm. And that is not for the faint of heart. You get all the big money center banks, you get JP Morgan, you get Morgan Stanley, you get Bank of America, you get all the banks, but you don't just get all the banks, you get three massive catalysts next week out of Netflix, ASML, and Taiwan Semiconductor, which are all growth. They are all worshipped on the growth side of the equation. And so very important earnings season next week. And I feel like it's when we get into earnings season is when the markets, even if the Iranian war is going on,
my corner, answering any and all questions and bugging the hell out of you. So let's just hop right into it with our Ask the Coaches a Question, Coach's Corner. Now, question one came from Trade for Fun. Now, I'm going to kind of paraphrase this because I know what he's asking, but let's start with you, Coach Riz. I'm scared to size up, but I know I'll never make real money staying small. How do you get past that? And I know this trader personally. He's currently trading 1 micro and wants to know when he should start moving to 2 or 3. What would your advice be for him on this question?
You need to look at your trade journal and evaluate what your past trade performance has been. If you're finding success and your win-to-loss ratio is in your favor, then it probably is in your best interest to start reevaluating your sizing on the position based off of that. But ultimately, you really need to review your existing trade journal to ensure that, you are trading, you don't want the trades to just be too small. And especially if you're undercutting yourself all the time. The other thing you can do is start paper trading so you can sim trade and start seeing those trades come together. And so you can start understanding what that trade would look like, what the drawdown would look like, and paper trading it until you feel more acclimated to it. That's what my process would be on it.
That's a great point with the paper trading, because going from 1 to 2 or 1 to 3, that P&L moves a lot faster. And if you're not expecting these kind of moves, they can definitely throw you off and make you, go off your trader plan. Now, I've got a follow-up question for that. Do you think there's a certain size drawdown or portfolio where you can start sizing up, or do you think it's more just following your plan and seeing the results? Like one micro for every $1,000 is, for example, or something like that.
It's a matter of how you want to strategize and size yourself in. There's multiple ways that you can strategize on that. You could scale into the position, so you could also scale into the winner. You can set, targets that, as your account grows, you incrementally grow your sizing as well, so that as you're trading and you're putting more money in the pot, you also start to incrementally increase your sizing, which will give you higher leverage. Your risk to reward will be kind of skewed from that, but really it depends on the size of the account you're on. If you're doing like a 200K static, you probably don't want to be trading 1 MNQ. You really want to start looking at a little bit more sizing, because it's going to take you forever. It all comes down to like how much money you're trying to make. If you've got a $9,000 target that you're trying to clip in 30 days, you're not going to do that with a single MNQ con. It's going to be very stressful. So you're really going to need to start looking at, how you're doing your risk to rewards per trade, how many contracts you're taking, what your take profit is, and what your goal is for the day. Are you shooting for some type of target that you can make within the allocated amount of trades you're giving yourself, and a lot assigned to you? So that's kind of like a double-edged sword. You got to do the math on what you're making per trade, how many trades you're taking per day, and what's that going to turn out on the math in, say, 20 days of trading, because you have 20 business days of trading.
Yeah, and that's true. Yeah, $9,000 1 MNQ. That's tough. I mean, I'm sure it's doable with some of these swings, but oof, you'd have to hit every home run out of the park. Great answer and great question, Trade for Fun. Thank you for asking that. Now, Becky, this one is straight up your alley. And trust me, we all did this when we were newer traders, and you feel like you're just not getting it. So the question is, I feel like I understand everything, but when it's time to execute, I mess up. What am I doing wrong?
Dude, you're trading. You're right. We all have been there for sure. Okay, so you feel like you've studied, you've backtested, you've listened to mentors, you understand this is a bullish market, I want to try and get along, but you fumble the entry or you hesitate and you miss it. I feel like that's extremely common, because dialing that in is the fine-tuning work that just takes a really long time. And so for starters, don't be too hard on yourself, because this is extremely common, and I would say like unanimous amongst traders who are fine-tuning, because you have to mess up in order to figure out what you wish you would have done differently. And then, as Riz alluded to too, like journal everything, document what you are doing. Say, I was right on the long, but my entry sucked and I hit my max daily loss, or I was stopped out just to the tick because I placed my stop loss in the wrong place. And so I would say, instead of letting this period for this trader be frustrating, use it as fuel. Dig into it. Be a little irritated enough that you're like, I don't want to do that again. That was really irritating. I was bullish on the day and the day moved an upward trajectory, I should have been green. What can I fine tune? And so instead, kind of embrace the process of, if you're in your first year or two of trading, you're not honestly supposed to be massively profitable. You're just supposed to be figuring it out and fine tuning. And so I would say definitely use it as fuel and don't hate the process, but instead size down so that they don't hurt as bad when you take these lessons, and make them count and try and figure out, if I feel like I have a good understanding of the market context and the direction, what can I do to dial in my entries and try and be a little bit better week over week and get a little bit better entry, trust myself a little bit more. When I saw this candle pattern, it worked 4 out of 5 times. So when I see it again, I want to go in, and it might not win, but my strategy and my probabilities say that this is a good trade setup. So I would say dig into the work of it and use it as propellant to shore up what you know and lean into it, and don't stop trading. But if it is stressing you out and causing some anxiety, probably you're trading too big of size. If you're starting off from minis because you like those big wins, downsize. And I don't recommend anyone go from 1 mini to 1 micro, because that's going to feel like water in a river. And so I would say if you're trying to trade a mini and you're really frustrated and you're hitting your max loss, go to 2 to 4 minis or micros, and then you can scale. If you go in with 4 micros, you can scale out 2, and then you can scale out 2. And so that actually can get a little bit more profit built up, but not be the full leverage of 1 mini. So that's my advice: size down, embrace the process, and use it as fuel.
Now, I think you kind of personally, you alluded to this, but you personally went through this, right? I know I did.
Yeah.
So do you
100%.
remember a specific like aha moment or something that you implemented to yourself, a hard rule that got you kind of past this FOMO, not being able to click the button, to get it where you could actually execute your system without thinking?
Yes. What changed for me was transparency with my partner and my mentor. When I committed to sharing my screenshots, it would bite me in the ass a little bit more, excuse my language, for like feeling like feeding into FOMO or revenge trading or being irritated. But instead, if I would send my chart with my fills to my mentor and be like, I just got stopped out to the tick, I'm so frustrated, I would get the feedback of like, what if we did this? And I see how this entry would have worked and that would have worked. And so then I shared it and I pivoted and I opened the conversation and I opened to the feedback, even though I didn't like it. It made me vulnerable, but real with the actual situation. And that made me really have to face the music, I would say, and choose to improve instead of sharing the same screenshots the next year.
Mm-hmm. So what I'm hearing is accountability. You can't lie. You can lie to yourself, but you can't lie with screenshots to other people. They're going to tell you.
That's what I'm saying. It changes the game.
Yeah, especially traders. We don't beat around the bush. If you're doing something stupid, we're going to call you out because you probably know you're doing something stupid. Great answers all around. And I hope you guys listen to Becky. And if you guys didn't know, Becky has a lab every Tuesday she does right here in BluSky, where she goes over trading psychology tips, examples, and real life lessons that she has personally learned. And if you do not have your butt in the seat, unless something really important is going on in your life, what are you doing? And you know what? They're also recorded. So you have no excuse not to watch these labs. Now, last but not least, Matt, this question is for you because I know you've taught a lot of different people over the years, a lot of different styles, and you've seen people who make it and you've seen people who don't, and you've seen people who get stuck. So what separates someone from who eventually makes it from someone who just stays stuck forever?
Honestly, asking questions like the one that was asked to Becky and getting help from your mentors and your coaches and showing up. But at the end of the day, it's time and seat. It's setting your butt in the seat and going through the process. Is there one key attribute of human behavior that stands out when it comes to finding success versus failure? I would say elbow grease, hard work, and dedication stands out to me, because learning how to trade is not a difficult skill set, but it does take time. It takes time because it's not just about learning the process of putting in an order. There's also learning a lot of other learning, the fundamental side, the behavioral side, the technical side, the economic side. There's a lot of different ways to make money in the financial world. So I think the most difficult thing is time and seat to figure out who you are as a trader. I know a lot of people at BluSky start as a day trader, but there's a lot of other ways to make money in the financial world through cash flow systems, long-term systems. In fact, one of the most important conversations as you're coming into a market correction is not necessarily, can I capture that next great day trade? You can capture that next great day trade any day of the week, including twice on Sunday. you can't capture the next great fundamental opportunity in the market. You can't do the Warren Buffett school of buying when there's blood in the streets. And so it's not just about catching that next day trade and capturing 20 to 30 points at the low point. It's about understanding the entirety of the market. So I don't think there's one answer to that question. I've taught too many people to understand that there's a lot of ways to make money in the market, but you got to stay dedicated. You got to be a little bit stubborn, and you got to go through the learning process. I guarantee if you ask Becky or Riz, they would talk about their mentors and their coaches as much as themselves. I wouldn't be here today talking to you guys about trading if it wasn't for my coaches and mentors that helped shape me who I am. It to me, it's not that you can't learn from YouTube or books or websites or those types of things. You certainly can. But man, having somebody in your corner that has been down that road, has not only walked that road, but probably built that road, and helping you out and answering questions certainly goes a long way. But I don't think there's one key attribute that shifts people from success to failure. I think there's a lot that goes into that. But I would say elbow grease, tying those bootstraps up a little tighter and having that get the job done mentality is certainly a right start.
Yeah, great answer. And I know I felt stuck at the beginning, like, how the heck am I going to make this work? But I do go through some periods where I just feel stuck in general. Like, I know what I'm doing. It's just my mental state. I just feel like nothing's progressing. Do you ever get that? And if so, like, how do you get yourself out of the funk?
Yeah, I've been doing this for 20 years. I've had that more than one occasion.
Well, I want to make sure you're telling the truth, because you said no.
Of course. This can be a very tiring business over time. You carry a lot of emotion over time. And so obviously you're going to take some breaks and you're going to have some ups and some downs. And there's been times when I questioned myself, the market, everything. I think that's normal. So how do you get out of it? You have a community of like-minded investors and traders helping you. The biggest lie that I feel that is told is that we're all individual investors and individual traders. And that's not the truth of the scenario. That's not the truth anywhere else. You go to Wall Street, you think those bad boys and girls are making decisions just by themselves. You think, or they have
No
an
way.
entire team. And so to me, it's to get out from those funks we go in. It's not just about us. It's about the people we surround ourselves with. And if you're surrounding yourself with people that tell you no, and trading's gambling and trading's horrible and you're never going to find success, I'm willing to bet you never find success. And so I think a lot of this journey, especially early on, is finding that community of like-minded traders and investors that you can navigate with, that you can get help from, that you trust, so that when you do go through your funks, you can go to your community and be like, am I doing this right? Am I doing this wrong? Can you give me some help? Can you give me a second analysis on it to make sure that what I'm seeing is what you're seeing? Because getting questions answered by people that their trading style, their history, they've been part of your journey, a little bit easier to navigate. I've been doing this for 20 years. I don't know how people would do it without it.
I absolutely love that answer, because I never would have made it if I didn't have communities that I've been a part of, or now the BluSky community. If I tried to do this by myself, I would have quit so fast. So I absolutely love that answer. And even if you are a seasoned trader, being by yourself is not fun. You got to have traders to talk to. We don't usually have trader friends in real life. So we got to lean on the community. Have you ever had a
trading conversation with one of your friends who is not a trader?
Oh, it's ridiculous.
All they try to do is get a hot tip. That's it.
Yep, hot tip, or I'll show them my chart.
You're not getting any learning from them. They're pulling energy from you. It's not the thing.
Yep, absolutely. Well, alert bot in real time, right? A good one. But yeah, I have a couple friends that trade in real life, and when we're with a group of people and we start peeling off and talking about trading, people just hate us. It's so annoying. Yeah. But we are about out of time. Yeah, right. We are about out of time. If you did post a question in chat and it didn't get answered, please shoot me a DM. We'll get it on the list for next week. Unfortunately, we can't keep up with everybody. And if you made it this far, please go on YouTube, leave us a like, leave us a comment, share us with another community you're in. And we are also going to be on Spotify, Apple, all those good things. And if you enjoyed the podcast, we do streaming all day, every day at BluSky, from before market open to close. And we even have streamers up until, 10 p.m. Eastern at night. So no matter what your schedule is, we have something for you. And all of our lessons and things like that are recorded. Go to our YouTube, leave us some feedback. We are here to help. Now, that wraps up this episode.